Without a doubt, we have been discussing Nvidia for some time. Its open-source Llama 3 platform has been the key to unlocking the AI era and enabling businesses like OpenAI, Anthropic, and Meta. Therefore, I firmly think that Nvidia has taken the lead in this case, and I commend them for it. However, for a while now, we have been saying that if Nvidia is going to keep increasing at its current rate, which is rather extreme, those of you who know us well know that we wrote it for a 100-fold move, and we've missed a 3-fold increase. That is what occurs when the market has parabolic momentum and everyone joins in. However, we should expect to see significant gains in other corporations in the upcoming quarters if that is the parabolic move here. Actually, we haven't. We haven't, in fact. We may be witnessing an increase in productivity, but it will take a few more earnings seasons to confirm this. Currently, the first-order result is that generative AI is producing better, faster, more efficient, more creative, and more productive goods and services. That may be the case, but it's not yet obvious. Therefore, there is no doubt that Nvidia has been the first mover, as we and many others group it. However, we must observe some tangible advantages and benefits elsewhere in order to maintain that move. Another dynamic is at play with Nvidia, and to be honest, we take ownership of it in some of our more specialized initiatives, but we are keeping an eye on the competition because it is growing. Additionally, other businesses like Cerebras and Tenstorrent are involved in addition to AMD and Intel. The hyperscalers themselves are the source of it. Tesla, Microsoft, and Meta are developing their own processors, while Google has its own chip, TPU. Amazon has its own chip, Graviton. We recently learned that Elon has begun producing the latest iteration of Dogo, which will also be a rival, or that Tesla has begun producing it. Now that he has obtained the GPUs he desired from Nvidia for Tesla, Xi, and X itself. It's a really fascinating story, you know. Some of you may recall that we were there early, beating the table, and now you've seen us pull away or decrease the position because we need the pull-through elsewhere. We're captivated by what Nvidia has accomplished. For a brief time, we realized that there is potential for genuine upheaval among the Magnificent Six. We perceive genuine opportunities. For instance, Meta Platforms is open-sourcing big language models since they are clever enough and have the financial means to do so. Why? Enterprises are more likely to use large language models. Businesses have the resources to invest in them and are considering doing so. Customers refuse to pay. Because Facebook and Meta Platforms are more focused on the needs of their users, they can afford to release a large language model of open-source software and allow other developers to improve and enhance it. They can then continue to update it and take it back into Meta Platforms to create specialized, user-facing models on top of it. Incredibly intelligent and strong. Thus, Meta Platforms undoubtedly benefits from this new reality. However, what about Amazon, Google, and Apple? There may be a significant amount of disintermediation. Although they can use AI, their current business strategies rely on applications, advertising, and shopping, utilizing aggregated data to draw in customers. However, Alphabet, yes, Google, has some of the world's best AI researchers from DeepMind, a UK-based firm that it bought. This makes Alphabet extremely intriguing. An innovator faces a conundrum in this situation. What will they do? By definition, a personal assistant or ChatGPT-like product will direct me to the website where I can purchase shoes. No knockoffs, where I can get Todd shoes at the best price, possibly with a promotion or free delivery within 2 days. I won't have to click on any other links because it will send me straight to that website. The same is true for travel or other reasons to utilize ChatGPT. We can bypass these niche websites and Apple's apps, as well as Amazon, a fantastic cloud provider that will undoubtedly profit from infrastructure as a service and platform as a service. It's shopping, though. Perhaps Amazon is the website that provides us with exactly what we want, but it's possible that it's not. Well, it no longer receives the same level of consumer interest. Each of these equities has its put and take, and we believe that generative AI is genuinely revolutionary. Therefore, it seems dubious that so many other stocks were crowded out of the Magnificent Six, which are essentially these stocks. Additionally, we've never witnessed this kind of crowding in before by some measures. I believe I've already said this. They didn't pack into a small number of stocks, not even during the Depression when people were concerned about businesses going bankrupt. This time, we went higher. We'll discuss that Goldman study at the upcoming In the Know. Now, is there greater space to compete for the shares? Let's talk about what the street is saying, what Oracle said earlier this week, and some of the semi-final action today when we speak with Seema Modi this morning. CMA, indeed, Carl Jensen yesterday. Wang's remarks increased Nvidia's market value by more than $200 billion. That represents the fourth largest growth in a single day for any business in history. That is definitely causing a stir on the street this morning. According to Bernstein, who ranked Nvidia as a top choice, clients' worries about Blackwell delays appear to be largely unfounded. Margin concerns are exaggerated. They want to sell for $155 per share. The equity strategy team at Morgan Stanley added Nvidia to its list of companies to keep for the upcoming year based on both quantitative and fundamental analysis. They say you can't own Nvidia if you want to be exposed to AI. They believe that Blackwell's competitive position should be further solidified by its availability later this year. Whether yesterday's move was a sign of a durable rally is the key question that investors are currently attempting to answer. Mizuho is more cautious. Yesterday's tech flows were good, but they didn't indicate a rush to acquire long or semi-names or a surge of active purchasers. In fact, they stated that a brief squeeze has certain traits. Nvidia's stock is up 2% at this time. This version fixes the grammar mistakes without changing the original script's meaning or length. Yes, the continuation with the grammatical corrections is as follows. Raises another 2%. With the possibility of further expansion, this is undoubtedly an intriguing time for Nvidia, but it's crucial to remember that the market is sending conflicting signals. Some investors are more cautious than others, particularly when taking the longer-term competitive situation into account. The question still stands. Will the momentum continue or will we witness a pullback? This is because large stock rises like these can occasionally result in overbought conditions. Nvidia undoubtedly holds a dominant position in the AI market, but rivals are starting to appear as the AI industry as a whole rapidly changes. Although Nvidia's hegemony appears to be stable for the time being, we're monitoring developments with its rivals, particularly in the semiconductor and artificial intelligence hardware industries. Meanwhile, companies like Apple, Google, and Amazon are figuring out how to incorporate AI into their current business models, which may open up new avenues for expansion. Generative AI's future is still unclear, though. Although there are some indications of genuine disruption, it is unclear if this will result in long-term, widespread growth. As we've spoken about, the way we deal with some of the biggest digital businesses may alter as a result of the shifting market dynamics and the possibility of AI disintermediation. It is important for investors to remain watchful in the future. Technology is developing at an increasing rate, especially in AI, and we may witness more innovations that transform entire sectors. Anyone working in the computer industry must think carefully about whether these changes will help established companies like Nvidia or cause new competitors to emerge. The emphasis on generative AI is just one aspect of the tale. The larger changes in processing power, data analysis, and AI-driven innovation could also be advantageous to other areas of the digital ecosystem. Sectors like cloud computing, semiconductors, and artificial intelligence, AI, have the potential to prosper, but there are hazards involved, as we've seen in past market cycles. It will be crucial for investors to diversify and comprehend the long-term effects of these technologies. Although Nvidia is undoubtedly influencing the direction of AI, the industry as a whole still has a long way to go. It's hard to predict which businesses will win in the upcoming years as the competition heats up. This continuation fixes grammatical problems while maintaining the original text and structure. If you require any other changes, please let me know.